Bitcoin's future hinges on a crucial Senate vote. Will the Genius Act send prices soaring or crashing? Find out how this bill could impact your crypto investments. In the latest video from Altcoin Daily, Bitcoin's price dipped by 10% 2 weeks after a golden cross. The video discusses the upcoming Senate vote on the Stablecoin bill, Genius Act, within the next 10 days. This bill is considered more impactful than the 2024 Bitcoin ETF approvals, as stablecoins are vital on-ramps for cash into crypto. Bitwise CEO Hunter Horsley believes regulatory clarity is the biggest factor for crypto adoption, surpassing even ETF approvals. He sees the stablecoin bill as the most significant development in a decade for Bitcoin. The video predicts that, similar to the ETF approval, the Bitcoin price might initially dip after the bill's passage, but ultimately rise due to increased institutional investment. The host emphasizes that this bill provides regulatory clarity, allowing financial institutions to finally interact with crypto. This, along with the market structure bill expected later this year, will be a catalyst for the market. The emphasis on the stablecoin bill's importance resonates with the current buzz around regulation. Many experts believe that clear regulatory frameworks are crucial for the maturation of the crypto market. While past performance is not indicative of future results, the analogy to the Bitcoin ETF approval in 2024 offers an interesting parallel. The potential for an initial dip followed by a sustained rise seems plausible, given historical trends. In the latest video from Crypto Rover, Bitcoin bounced off support around $21,500 after a dip, creating what he calls a bear trap. He believes this is due to a buildup of short positions leading to negative funding rates. He points out that BlackRock recently bought $34 million worth of ETH and discusses the M2 money supply, suggesting it indicates a potential market bottom soon, possibly around $22,000. He shares that he's been accumulating ETH and expects it to rally to $4,000. He also mentions a Binance Grid trading bot he's using and offers viewers a link to copy his trades or get a bonus when signing up to Binance. Crypto Rover's prediction about ETH reaching $4,000 aligns with the current positive sentiment surrounding Ethereum. The recent news about BlackRock's ETH purchase and the ongoing developments in the DeFi space certainly contribute to this optimism. While the M2 money supply correlation with Bitcoin's price is an interesting observation, it's important to remember that macroeconomic factors are just one piece of the puzzle in the crypto market's complex dynamics. The overall market sentiment, regulatory developments, and technological advancements all play significant roles. It will be interesting to see how these factors interact in the coming months and if ETH truly makes the predicted move. In the latest video from Lark Davis, he discusses the recent Ethereum price drop, linking it to the online feud between Trump and Elon Musk. He points out that Ethereum's price fell by about 9%, reaching the bottom of its current trading range. Lark is hoping for a price recovery above the 200-day exponential moving average, EMA, by the weekend. If this doesn't happen, he predicts a further price drop to around $2,100 to $2,200. He mentions a current long position on Ethereum with a stop loss around $2,430 and a target of $2,650. Lark also discusses Pepe coin, noting the downtrend in both the MACD and RSI indicators. He's looking for a bounce back to the 200-day EMA, but acknowledges the current downtrend and the coin's price falling below the 20-day EMA. He has a long position open on Pepe with a stop loss at 0.000109 and a take profit at 0.000012. Lark recommends BitUnix for trading, highlighting their giveaways, deposit bonuses, and lack of KYC requirements. I think Lark's caution is understandable, especially given the current market volatility. Recent news suggests that institutional investors are increasingly interested in Ethereum, which could provide long-term support for its price. However, short-term price fluctuations due to social media events or general market sentiment can't be ruled out, so risk management, like using stop losses, is still key. Pepe, being a meme coin, is heavily reliant on social media trends and can see extreme price swings. It's a higher risk play compared to Ethereum. In the latest video from Ben Cowan, He discusses the financial implications of the differing viewpoints between Elon Musk and Donald Trump regarding U.S. national debt. Cowen explains that Musk's focus is on reducing federal spending, while Trump, like most politicians, has historically favored increasing the debt ceiling. Cowen notes that while spending cuts might lead to a short-term recession, unchecked debt growth could have long-term negative consequences. He observes that the feud is affecting financial markets with Tesla down 14%, Bitcoin down 2.5%, and Ethereum down 3%. Cowen references past post-election years with similar economic conditions: 1969, 1973, 1977, 1981, and 2001, to suggest a possible market downturn around Q3 of 2025. He states that if a new spending bill increasing the debt limit is passed, it could lead to market instability in 2026. The clash between Musk and Trump highlights a fundamental tension in economic policy. While fiscal conservatism, as advocated by Musk, seems prudent in the long run, the political realities of potential short-term economic pain often lead to decisions like raising the debt ceiling. The fact that international confidence in U.S. debt might be wavering adds another layer of complexity to the situation. The comparison with previous post-election years offers an intriguing, if not concerning, parallel to current market trends. It will be interesting to see how the predicted Q3 downturn, if it occurs, plays out in the context of these broader economic and political factors. In the latest video from Coin Bureau, Guy discusses Trump's One Big Beautiful Bill Act, a proposed $4 trillion spending bill. The bill aims to cut taxes, increase spending on military and border security, and supposedly achieve a $2 trillion surplus. However, its accounting is questionable, relying on temporary tax cuts and optimistic revenue projections, leading to criticism from sources like the Congressional Budget Office and even Elon Musk. The bill barely passed the House and faces challenges in the Senate, with disagreements over spending cuts and debt ceiling increases. This uncertainty impacts the bond market and the U.S. dollar, potentially benefiting Bitcoin. The political wrangling around this bill underscores the complex relationship between government spending, economic stability, and the cryptocurrency market. While the idea of a decentralized currency like Bitcoin gaining from the instability of the US dollar is compelling, it's important to remember that crypto markets are still relatively young and influenced by a myriad of factors beyond government policy. It will be interesting to see how this situation unfolds and what long-term impact it has on the adoption and value of Bitcoin.